Hi everyone, welcome to another update on the stock screener. Today we're going to look at gold miners because gold is starting to break out. This is a very big green reversal candle and we need to buy the best gold miner out there. So we are going to look at all of them today, and I already know which one that I will buy, but let's check them all again because a lot can happen. So I want to buy a company with high margin, so low break-even costs, high leverage to the gold price, and a low enterprise value to free cash flow. So let's fill everything in. Let's start with K92 Mining. So K92 Mining, a mine that doesn't have a lot of free cash flow in the beginning of the years, but somewhere in 2027 it will shoot up. So I think it's still too early for this company to buy it. What's the price currently? $5.45 Canadian. So that's about $4. Okay. So about 1 billion in market cap. Yeah, that's about 1 billion in market cap. And the enterprise value is, let's calculate the enterprise value is market cap. So the enterprise value is actually 880 million. So they have some surplus cash because they need to build the mine. Enterprise value is about 100 million less than the market cap. So what's the EV to free cash flow? And we do need to know that their AISC is at 1,200, so that's pretty high. AISC at 1,200, but it's going to go down in the future. So at current gold prices, let's say 1900. Let's start at 1900. So we have an enterprise value to free cash flow, and free cash flow is, let's take 2023. It doesn't have any free cash flow currently. That's a problem. Yep. We could take 2024. Maybe that it will be better in 2024. Okay, in 2024, we are going to 300,000 production and costs should go down. So then we have an EV to free cash flow of 6 based on 2024 data. So yeah, a bit overvalued currently based on 5 times earnings valuation. Leverage. What's the leverage for 2024? So leverage is calculated by, now I'm going to take 2024. This minus this. So if we go up 25%, then divided by the market cap times 4. That's the leverage, 2 times leverage. So if the gold price goes up double, then this will go up fourfold. I mean, if this goes up 100%, then it will go up 200%. So actually a triple. Okay, so that's what this means. And when you look at here, when this goes from 2000 to 2000, what was it? 2000 to 2500, which is 25%. So 25%, and then we go up maybe 500 million. Yeah, 500 million, so it goes up 50%. You see it? So if gold goes up 25%, then this goes up 50%, which is 2 times leverage. Okay, so K92, not bad. EV to free cash flow is this here. And the leverage is indeed 1.8, but let's do this. Maybe just do this and then this and then 26. Yeah, 1.9 leverage. Good. That was the first one. And actually, the costs have actually gone up for K92. So let's take another look at the break-evens. So break-even at 2023 is actually 2000 now. Not good because the costs have gone up. For 2024, the break-even will be 1150 and then 1000. So 2000, 1150 and then 1000. It is what it is. They have a lot of capex and their costs AIC has gone up. Artemis Gold now. Would I buy K92? No, it's not there yet. We will wait for the production. Artemis Gold is not in production yet, so a lot of capex risk. Let's see EV to free cash flow. Artemis Gold is currently at 5.26. which is 3.9 US dollars. So it's down a bit. EV free cash flow enterprise value is basically it's the same as the market cap. So this is this. As you can see here, 5.88. Yeah, it has gone down a bit. 5.88 was it, and then 5.26. So 5.26. Maybe this is a buying opportunity. Now it's only 1.24 enterprise value. Would I buy this? Maybe. Looks very good value, but it's not in production yet. So that's the enterprise value. Free cash flow is, let's take 2023. So EV to free cash flow is at 2000 gold. For EV to free cash flow. Yeah, that's possible. For EV to free cash flow. Is coming from this calculation. And leverage is this minus this divided by market cap times 4. So 2.25 leverage. Okay. Not bad. It's actually a good buy. So EV to free cash flow is this 4 and leverage 2.2. Let's see what it is now. 2.3. Yep. Yeah, 2.3. So next one. I think this is good. 2 times leverage and very cheap. And NPV is higher than the EV. So I would buy this. Next one is Minera Alamos. So how has this one done? Not done very well. 0.305. So it has actually gone down a bit from last time. Problem with this company is these are all PEAs. So we don't know if they are going to production anytime soon. But anyway, let's try to create EV to free cash flow and leverage. EV free cash flow They do have some excess cash. So 90, this is in CAD. 95 million enterprise value and free cash flow. Let's take this one, 24. Because if we take this one, then it's not a buy anyway. So let's take 24 when they get in production. Okay, so EV to free cash flow is a possible 3 times EV to free cash flow, and leverage is this minus this divided by market cap times 4. 4 times leverage and 3 times EV to free cash flow. Three times EV to free cash flow, and yeah, the 8 times leverage is if we take into account 2028 production, but I would like to do 2024 production. Okay. Next one, Dundee Precious Metals. This one looks like it's bottoming out, 8.68. So it's down a bit from last time. Maybe it's a buying opportunity. When we just use the same production numbers as last time, I'm not going to check it. Then you have a very low leverage, and EV to free cash flow is pretty fair value at 5. So nothing special about this one, but it's a good buy. Leverage is very low, 1.3. But yeah, if you just want to buy gold and have a tiny bit of leverage, you could buy this. G Mining. Where do we stand here? 1.15. Yeah, it's down a bit. It was 1.25, now it's 1.15. So it has gone down a bit. Maybe it's a buying opportunity. So actually nothing has happened. It's just a lower share price now. So EV to free cash flow 6.6 and leverage is 2.6. Not bad. The good thing about this company is that it's a very low cost. 1,200 all-in break-even cost. And fair value. Because at 1,900 we have a market cap that's 5 times earnings. So not bad. Let's add it to the Excel overview. Leverage was 2.5. Let's see what it is now. Yeah, 2.6. Okay, next one, Majestic Gold, the China company with an open pit that has a lot of capex and permit problems. I actually should not be looking at this one, but let's do it anyway. I don't think this is buyable. Has not done well, 0.065. So it's down a lot. So EV to free cash flow is very low. Amazing. And leverage 2.7. Not sure what is happening here. Let's look at the latest news. I haven't looked at it. So equity is 113 million. And it was 140 million. So something has happened that's not good. 13, 14. Yeah, it has a loss. It has a loss. Probably due to the yuan. So yeah. Not interesting. But anyway, I will just use these numbers. They could have some operational problems in the last quarter. Step Gold. I know Step Gold has been going down a lot. Not sure why. 0.66. down a tiny bit. So market cap 48 million US dollars. Looks like a bottom. Maybe it's a buying opportunity. Let's look at leverage and EV to free cash flow. So they had 24 million in debt. Plus 24. So EV is 72, and then free cash flow is, yeah, let's take the 2028 one, because they are building the new mine, which will come online maybe in 2 years. So EV to free cash flow is 2. Very cheap. Leverage is leverage is 13 leverage. So a very, very cheap company. I have no idea why this is so cheap. When you look at the upside, there is an NPV of 200 million NPV, and it's trading at only 70 million enterprise value, right? So this should re-rate at some point. But I think investors are a bit afraid that they are not going to be able to bring this underground mine in production on schedule. So that's probably the worry. But anyway, in theory, this should be a buy. And leverage is indeed 13. Very high leverage to gold. So if you're not afraid, you can buy some of Step Gold. Then Soma Gold, which is, of course, my favorite mine. And you can choose which leverage that we take. I know the share price was 0.71 last time. So it's actually, is it, maybe it's higher. 0.73. So it has hit an all-time high. Amazing company. So what is the leverage now? We still have a leverage of 5, the highest leverage of many gold mines. EV to free cash flow is about to go to 3.8. Let's take the 3.8 one and this one, leverage 5. They are still contemplating about the mill move. So we don't know that yet. And this was 6.6 and now it's 5. So leverage has gone down a bit because the market cap has gone to all-time highs, but still 5 times leverage is much higher than most of these. And EV to free cash flow is 3.8. It's a good buy. Luca Mining. What has Luca Mining been doing? They are still ramping up to full production. Maybe a buying opportunity, 0.27. Yeah, it has gone down a lot. EV free cash flow. This is in CID. This okay, so market cap 40, but enterprise value much higher because there is debt around 30 million debt. As you can see here, 40 million current assets and 90 million debt. So not the best company to buy because of all the debt. And now it's at 0.27. So it has gone up a bit on this chart. 100 million enterprise value. Because of the high debt. Yeah. Does this look good? In theory, it looks good, but they still need to go to the 40,000 production. They are not there yet. Free cash flow should go to this here. Leverage. EV to free cash flow is 3.8 and leverage is 6.6 leverage. Yeah, in theory, it's a good buy if and only if they can bring it in production. And that's where we have the problem. We don't know yet because they have been delaying and delaying. So it was 4 leverage and now it's 6.6 leverage because share price has gone down. Marathon Gold. Is not in production yet, so you need to wait a few years. And it has gone down a lot, 0.56. 0.4, look at this, it has dropped a lot. EV, free cash flow. As you can see on this chart, this company has a lot of upside. It's only at below 200, 160, but the upside is 500. So what is happening here? Why is it down? I think it's because of the permit issues and capex issues. But anyway, let's create the EV to free cash flow. EV is 376, very high EV. Why is it so high? Yeah, this needs to be updated. Let's 0.56 down a bit. This is in CID, so we have 500 million CID in enterprise value. So that's about the same as this 376 US dollars enterprise value. Free cash flow is this, so 3.5 times EV to free cash flow. Leverage is 8 times leverage. Yeah, I don't know why this company is going down. I have no idea. It should be going up. So there's something going on that's a problem. 8 times leverage, and now it's 9 times leverage. So what's the problem actually? I don't know. Let's take a look at the latest news. They're just constructing, so not a lot of news to see. Yeah, probably insiders know about capex problems or permitting problems, delays. And we do know that that we have 300 million in capex. So that's a very high capex, 300 million for a market cap of only 160 million market cap. So yeah, the capex is higher than the market cap. So that's the problem. It's very dangerous to buy this company because of capex overhangs. So I would not buy this one. Cerrado Gold, the same problem. A lot of capex. And that could be a problem. Still no permit, still no feasibility study, and still no financing. So I'm not going to buy Cerrado Gold, but anyway, let's take a look. So it has gone up, not sure why. There's no news at all, but it's at 0.68. So it has gone up a bit. EV, the latest data is 0.68. So this is in CAD, but this is in US dollars, so times. So we have a market cap of 65, but enterprise value much higher at 227. 227 CAD because they have a lot of debt. Let's check this. Yeah, 200 million liabilities with only 80 million assets. So 120 extra liabilities. 120 extra liabilities. So yeah, that's possible. That's in US dollars. Right? Yeah, in US dollars. So yeah, it looks cheap, but it's not because the enterprise value is much higher. Free cash flow, let's take. Shall we take 2025 when they get the Brazil project in production? Because that's what everyone is waiting for this company. So 2025. Then we have an EV to free cash flow of 2. Very good if they can bring it in production. And leverage is 22 leverage. Yeah, that's a very high leverage, but that's only for 2025. So this is the leverage that you get, and this is the market cap. Yeah. Problem is with Cerrado Gold, they have nothing yet. No financing, no feasibility study, no permits. So I'm not going to buy this. Leverage was 20, and now it's 22. Orla Mining, I don't even have enterprise value data. So we need to look it up. 4.44. This one has dropped a lot since last time. Let's see. Wow. What has happened here? Let's take a look at the balance sheet. Well, I told you that it was overvalued, and I think it's still overvalued by a lot. It should be worth around half of the current value at 1900 gold. So everyone says this is a nice company, good company, but I said it was completely overvalued. You can see that here. What's the enterprise value right now? Let's see. Uh, let's add it in here. Share count 350. In US dollars. 4.44. So we have 1 billion in market cap US dollars, and balance sheet gives us 153 million, 154 million. And liabilities 181. And I take everything. Because that's how I operate. And then we add this series. Voila, and this is completely overvalued. US dollars. So 1.17 billion enterprise value. Free cash flow is, let's take 2023. EV to free cash flow 37. How on earth is this possible? 37 free cash flow. Net income is, yes, 50 million. 40 to 50 million, and then the EV is 1 billion. How on earth is this so overvalued? Maybe because people think that production is going to increase in the coming years, yeah. Okay. But currently it's really overvalued. Leverage is 0.6 leverage. This is the worst company that you can buy. And that's why this is dropping. And it has more to drop. But let's put it on the chart. One times leverage? I don't think so. It's 0.6 times leverage. Next one is Alamos Gold. Has been stable, 12.2. Is doing absolutely nothing. Yeah. I don't think this is a buy. When you just look at the chart here, I mean, they do have a lot of gold, but the cash flow is too small to be excited about. $5 billion enterprise value. Yep, 5 billion. Free cash flow is this. Leverage. $38 EV to free cash flow. That's completely overvalued. and 0.6 times leverage. So it's even better to just buy gold instead of Almaz gold. Okay, next one, B2 Gold. B2 Gold is in a very bad place in Africa, next to Niger, in Mali. So that's already a discount for me. And it has not done that well. 3.2. Actually just the same as here. So it has done absolutely nothing. EV, free cash flow. Okay, I'm going to take a look at the balance sheet. I'm assuming that everything is just stable in production. So 889 million in current. And liabilities. $791. So they actually have excess cash. That's a good balance sheet. That's actually amazing. Free cash flow will be so at 1900 gold. Yeah, it's still overvalued. It's still overvalued. Double overvalued. PE of 10. But I mean, it's a big company, so I would like to buy PE of 5. Why would I buy PE of 10 if I can buy PE of 5? Leverage is 1.7. That's not spectacular. EV to free cash flow of 10. So not special. I'm not going to buy this. Next one, Aris Mining. Aris Mining has a lot of growth. Problem is, yeah, capex and execution. But if you are taking the risk, then maybe it can have a lot of return. But yeah, it's a dangerous company because of all the mines that they still need to build. Currently 3.4 share price. So stable share price. Um, I should look at the latest balance sheet. Okay. In US dollars. So we have 291. Yeah, it's still 291 and 664. So this is the latest balance sheet. Yeah, it's just the latest one and the latest data. So we have EV to free cash flow of 10, which is pretty high. Leverage is good. I would still buy the neighbor, which is Soma Gold. Why? Because Soma Gold has an EV to free cash flow of only 4, as you can see here. Leverage is 5. So if you compare the neighbors, both have the same leverage, but Soma Gold is much cheaper, half cheaper of the Aris Gold here. But of course, Aris has higher mine life. So you can choose. Aris has 1,300 break even, 1,500 to 1,300. Soma at 1,200, 1,100. So yeah, choose your mine. Karora Resources is the next one. Let's see. 4.13. So it has actually gone up. Yeah, stable. For the sake of getting it done, let's just take these numbers here. 9 EV to free cash flow is too high and leverage is not good enough. Next one is Orezone Gold. I have heard good things about this, so share price should be up. Absolutely not. 0.9. Why is it down? I don't know. I haven't looked at it. Maybe I should take a look at the balance sheet. I know they are building a new mine. Let's see. EV, free cash flow is current assets 59.5 plus liabilities 164. So a lot of liabilities. Enterprise value 383. This should actually be fair value because it's overvalued in 2024, but they are growing the mine, so it should go up in the future. Leverage. Yeah, leverage. We should take the 2024 number currently. I know it can go higher in the future, but let's take the 2024 number. 3 times leverage, EV to free cash flow. And free cash flow, we take this number. 10. Not bad, but also not spectacular. All-in sustaining cost 1,100. Let's take a look actually at the latest data. I haven't looked at it. Yeah, it's still 1,100, so okay. Uh, uh, when we look at this here, what's the market cap again? 279 now. So yeah, it's down a lot. Yeah, 279. Actually, this is an interesting company to buy. If it's down a bit more, let's say 300, then I would get interested. Yeah. This is actually a good buy. If you take into account that their production will increase from 2026 onwards. But currently, I think it's too early. Maybe in 2 years from now, I can buy it. Aura Minerals, my favorite second mine that I could buy after Soma Gold. I'm looking at this very carefully. ORA. Yes, I'm interested in buying some of this. And why is that? 9.3. So it's gone up, so it has done well. Why do I like this? Because from 2025 it will have tremendous cash flow, around 250 million per year. So that's a PE of 3, which is very good. But of course, they're still building it. That's the risk. EV to free cash flow should be around 5, taking the numbers of 2024, which is 360,000 production. Yeah, somewhere between these two here. So yeah, it's buyable and it has good leverage. And it has growth. Next one, Agnico Eagle. One of the best mines, low cost, but probably overvalued. 48.6. Yeah, it's about the same. Free cash flow. Yeah, it's just the mine that's going to produce the same every year. So not a lot of growth. And EV is, I actually don't know what the EV is. So let's look at the balance sheet. Okay, I don't like this. Here is the report. What kind of report is this? Where is... Okay. Current assets. $2.1 billion. Liabilities 9.3. So actually a lot of liabilities. $23 times EV to free cash flow, completely overvalued. I'm never going to buy this one. Because it's completely overvalued. And no leverage, 1 times leverage. So you can have Agnico Eagle, I'm not going to buy it. One times leverage. Next one, Shanta Gold. Okay, that's not a good one. Share price in US dollars. Let's just take that. Has this actually been doing great? Yeah, it's stable. $50 million current assets. $82 liabilities. Free cash flow. Let's take 2023. Five times EV to free cash flow. Yep, so that's fair value. Leverage is 5 times leverage. Yeah, not bad. Only problem is they are not there yet. They still need to ramp it up. And mine life, not sure about that. So maybe it's a bit overvalued at this price. Next one, Fortitude Gold. Don't even know the ticker about this. Is it this? Yeah. A stable company, 6.04. It has gone down. Yeah, this is a good company, but problem is mine life. So they still have about maybe 3 to 4 year mine life, and then it's over. So it's a dividend paying company, but not a lot of future, I think. It does have a lot of cash, 70 million cash, apparently. Current assets 100, liabilities 15. So a lot of cash, but is it enough for the free cash flow? Free cash flow is EV to free cash flow 3. Very good. And leverage 2. Actually, it's a good company. Not sure why it's down. Yeah, 60 EV. So it's actually a good buy considering all the cash that they have. Net income was 3.6, 14 million. Yeah, PE of 10. So something has happened here. That's not good. What's the all-in cost? 680. Why do I have 1,200? Yeah, curious company. Let's just... Yeah, I'm not sure why we have 1,000 here, and here we have 680. And still net income is still 313 million. Yeah, the exploration expense is really high. Yeah, this needs to be counted as well. Should be part of the AISC, or else it should be in the capex 24 million. So yeah, there are some shenanigans with this company. Anyway, I will just put it in here. There are some shenanigans. Next, Monument Mining. I still own Monument Mining. High leverage and low EV to free cash flow. And it's doing very well, 0.125. Stable. Latest data, EV is the same as market cap. So they have the equal amounts. So EV is around 31 US dollars. And free cash flow should be let's take this one. $2.6, very cheap and high leverage. I like that. And you can see that here as well. If you add in Murchison, then this is almost trading at enterprise value. And there is some growth. And a lot of leverage, 6 times leverage to gold. You can see that here, the stope is very high. Six times leverage, 3 times EV to free cash flow. We don't know the all-in cost yet, so let's see if they can improve their operations. They had some production problems. Caliber Mining. $1.5. Basically just the same. And let's quickly take these numbers. Free cash flow, let's take next year. And we have 8 times EV to free cash flow and good leverage. This is a bit overvalued then, so I wouldn't buy it. Yeah, it's overvalued. I can find companies with more leverage. Serabi Gold. $0.52. Has gone up a bit. We already have the leverage numbers here. That's easy. So let's take 7 times leverage, 5 times EV to free cash flow. Not bad. Problem is the break-even costs are a bit high. So dangerous margins. So I wouldn't buy it. Eight times leverage. Jaguar Mining, they had some production improvements, but not good enough. Not good enough. Free cash flow is, let's take this one. So EV to free cash flow is 12. That's much too high. And leverage 6 times. But of course, that's only if they can manage to bring those costs down, and they are not able to do that. So troublesome company. Then we have Newmont Mining. You know that I hate Newmont Mining. It's overvalued. So let's be quick about it. 39.4. Minus 3.8 plus 8. Free cash flow. Let's just take this one. EV. 21 times EV to free cash flow. Much too high. $1.3 times leverage. Too low. So I would never buy Newmont Mining. Okay, the last one, Equinox Gold. Some people like this one because of the leverage, but I don't like it because of the high costs and high debt. 4.42. So yeah, apparently 1 billion in debt or liabilities. Very high liabilities. EV to free cash flow. 28. Not very good. 28 EV to free cash flow. And you can see already here, there's no upside. It is what it is, right? 200. Yeah, here it says 13. And here's 16. Maybe something is wrong here. I use 810, 1400, AISC 1900. No, it's correct. Yeah, maybe 1400. Maybe it could be 1300. Yeah. Maybe it could go to 1300. Let's take 1300 AISC, and then the EV to free cash flow is a bit improved to 18. It's still too much to me. It's still too high at the current gold price. So I don't like this company because of the low margins. Leverage is 3, so not that great. We have other companies with more leverage. EV to free cash flow too high. So that's it, and I'll see you in the next video. Bye.